We'll be covering a number of different topics during today's presentation. First, we'll discuss the latest developments in efforts to improve the CPA pipeline and provide alternative pathways to CPA licensure, including an interview with CEO of the AICPA, Mark Koziel. Then we'll talk about the record high budget that was just passed for New Jersey's 2026 fiscal year. Next, we'll discuss New Jersey's upcoming election, where the governor and all 80 assembly seats are up for a vote. Then we'll get a New Jersey Division of Taxation update from Director Marita Scarata. And then we'll hear from Mark again about legislative and advocacy issues impacting CPAs. We got a lot, so let's get started. And let's start with the introduction of our panelists. To my immediate left, of course, is AJ Johnson, CEO and Executive Director of the NJCPA. And to AJ's left is John Shomack, NJCPA President and a member of the firm at Smolin, Lupin and Company. So, John, this is your first Issues Watch. Are you nervous?
Yes, it is. No,
you don't look nervous. So. You don't look nervous.
Thank you.
All right. I wish we could hit the ground running with you, but we're actually going to start with a video.
Okay.
So I mentioned in the intro that Mark Koziel, of course, is the new president and CEO of the AICPA. He was unable to be with us live today, but AJ sat down with him earlier this week to talk about a number of issues. In this clip, they discuss CPA pipeline activities across the country.
Mark, let's start with one of the major topics being discussed around the country. I'm referring to the additional pathway for obtaining CPA licensure. Many states have already passed legislation, and others, including our state, New Jersey, are in the process of doing so. And the AICPA and NASPA recently approved model legislation for the new CPA licensure path. Can you talk about the model legislation and what that includes?
Yeah, so the model language that we have inside of the Uniform Accountancy Act is the ability for states to be as consistent as we could possibly be, right? So we encourage all states to use the language as stated in the UAA. Now, there's three big pieces that have changed based on these additional changes or the additional pathway that's created. First and foremost is around the actual pathway itself. We've added a bachelor's degree plus 2 years of experience plus passage of the exam as an additional pathway. And so this is an old pathway kind of brought back. 150-hour pathway is still there. Master's degree pathway is still there. This new pathway is bachelor's plus 2 years experience. Notice I said bachelor's, not 120 hours. And I think that's critical to the language because not every bachelor's program is at 120 hours. And so we want to make sure that it is an undergraduate degree in accounting, bachelor's degree, plus the 2 years, plus the exam to get there. The second piece is around mobility. Prior to this, we had state-based mobility, but because of adding this additional pathway and where we've been and how things have been done in past mobility, it has made a switch to being an individual-based mobility rather than the state-based that was there before. And so it'll be a little more work for the firms, but in the end, it should be easier to be able to follow and determine whether or not you are in compliance state by state as we go forward. And then the final one is safe harbor language to say, okay, all CPAs who were licensed prior to December 31st, 24 qualify and will be okay as we move forward into it. Safe harbor language is important to make that mobility just a little bit easier.
Great. So I would like to touch on the individual based mobility. So while there's overwhelming support for this pathway, can you clarify the language and what should our members and others be thinking about in the shorter term as legislation continues to be passed throughout the country?
Yeah, I think, as the day the first state passed this new legislation, mobility was broken, right? So we are trying very quickly to keep mobility issues at a minimum. And I think that's even where that safe harbor language helps with that, in the short term until we can get to a point where all states have passed the new model language. And so from that point, we continue to see this individual-based mobility is going to be a way for the individual CPA to carry their license from state to state and look for compliance within what that means. So again, it's going to be a little more work up front, but then in the end, it should be a little bit easier. And we've been working on resources ourselves. We have some resources available through AICPA, and then also NASPA has been working on resources, and they have a web page dedicated to the changes that are happening inside of the state legislation that's out there.
That's great. Thank you. So we know that the additional pathway is not going to solve the CPA pipeline issue all on its own. Are there other activities or updates related to the pipeline that you'd like to share?
Yeah, a few years ago, the AICPA worked with the profession in general around the National Commission on Pipeline Initiatives. The National Pipeline Advisory Group was created, and there were a variety of recommendations that they made. And so I think it's really important, as you said, I mean, this is not a silver bullet. Just adding the bachelor's pathway is not going to solve all of our problems. When we look at starting salaries in the accounting profession are less than they are in other business-related professions that are out there. We need to be more competitive on that. We need to tell a better story. I mean, we all talk about this and what we need to do. And, so we've created some resources around that. But that story, that becomes very personal. I have my own story of becoming a CPA, why that was important. I have mentored kids of friends to also tell them what a great opportunity the CPA profession is. I still absolutely believe this is the greatest profession in the world, and we all need to live by that. We need to say it on a regular basis. We need to convince our own kids to go into accounting if we can, and we need to convince other kids, because I used to say to our partners all the time, is our firm good enough for your kid? And they'd say, well, I didn't I convinced my kid not to go into accounting. I said, well, that's a problem by itself, but I'm hiring somebody else's kid, and I want to look them in the eye and say that this is the right profession for them.
So we're going to hear more from Mark later in the broadcast, but there was a lot to digest in that clip and a lot to talk about. AJ, I wanted to start with you. One of the last things that Mark said was about the profession telling a better story. We talked a lot about this, and I do want to give credit. Mark had mentioned the AICPA's task force. I want to mention our task force that got together, it was probably 2 years ago. I want to compliment them on the work that they did. And one of the things they said that the profession needed to do, NJCPA needed to do, was tell a better story. Yes. And I know we've talked a lot about that. So I don't know if you wanted to comment on what Mark was talking about.
Absolutely. So, overall, we are seeing positive changes, which is great. So we should continue to tell a positive story because the word is getting out there. And accounting enrollments are up. Also, we're seeing increases in the Masters of Accountancy folks going into the program. And so I think this is a time where we could be optimistic.
Yes, absolutely.
We can go from doom and gloom,
right,
and we can look at our messaging. I know we've talked about our messaging here as a state society to focus on access, impact, and opportunity. Mm-hmm. So we can weave those messages through, working with our chapters, our influencers, educators, parents. So I think that we've turned the corner.
Yeah. Well, we're kind of into phase two, as we've called it, where we're not in sort of panic mode and worried that the ship is leaking.
Right.
Like you said, the numbers are better. That according to the CAQ, perceptions of accounting amongst young people have improved dramatically. Accounting enrollments are up. Enrollments in Masters of Accountancy programs are up. So there's really good news. Yes. Not that we've solved the problem, certainly, but there's good news there. And we need to share that more so it doesn't seem like, well, nobody wants to get into accounting.
Absolutely.
So John, one of the things that you've talked a lot about is the role that states have played in the pipeline advocacy. Can you talk a little bit about how states have played such a critical role in getting all of that legislation that Mark was referring to, getting all of that legislation passed?
Yes, thank you, Don. It's very important. When we look at the numbers, close to 19 states have passed this act, and others are in the process of doing so. So it's key. But as Mark said, that's not just the silver bullet, as he quote, end quote. It's the story. It's the impact that we make to the youth and to the younger people that are coming up through the profession. They have to be told positive reinforcement. The days of doom and gloom hopefully are in the rearview mirror, and we can look forward to seeing positive reinforcement. For example, when a team gets done with a job, reinforce all the good things that you're doing. Tell a good story. Show that the people that are working with you become financial change for that client, that family, that company, and can make a difference in their lives.
Right, and tell personal stories. I think every CPA has a personal story of dealing with an individual or a business or a nonprofit they can tell. And that's where we get questions from a lot of members and firms like, well, what can we do? It's nice when they say, hey, the NJCPA is doing a great job, but I think firms have and individual CPAs have so much to give in this area. So AJ, let's turn to the CPA pathway activities here in New Jersey.
Sure.
Mark mentioned a number of other states, but we've made a lot of progress here in New Jersey as well.
Yes. So a couple of things. Legislation would create an additional pathway to CPA licensure here in the state. As Mark said, we're focused on a bachelor's degree plus 2 years of experience in the CPA exam as well. And the existing pathway would still remain. So the Assembly passed the bill in May, and the Senate Commerce Committee passed the bill in June. And this fall, the Senate Budget and Appropriations Committee will vote, followed by the full Senate, and then it will go to the governor for signature. And we haven't experienced any opposition, so we're still confident that this will get done before the end of the year. And the new pathway would be effective starting January 1. So we're excited about that.
And I think it was interesting when we've had conversations with lawmakers in the last couple of years that gloom and doom language actually did help in speaking with them. Because when you start saying like, well, municipalities, governments, businesses won't have access to CPAs, all of a sudden their eyes get big and they're like, uh-oh. Yeah. So that it was actually helpful, but now, as we've said, it's time to move on to phase 2. So John, I think you also had some comments.
Yes, the NJCPA will also be working with the New Jersey State Board of Accountancy to help ensure that the regulations and forms are updated by January, so we don't leave anybody in the dark. Also, we are preparing frequently asked questions and guidance for students. This could be a very challenging event for them, so we're trying to help them. CPA candidates, educators, and firms to help with the transition to this new pathway, which I'm very excited about.
Do you find that your new hires, interns, even your experienced staff, do you think they're aware of the changes that are happening around the country, or is there more education that needs to happen?
There's definitely more that has to be done. A lot are still stuck with the 150, and that's all they hear. So this is an education process for all the young professionals out there.
Okay, good to know. So we're going to stay in the state of New Jersey, but this time we're going to talk a little bit about the state budget. NJCPA's Jeff Kaseman recently sat down with a frequent guest, Chris Emmelholtz, Chief Government Affairs Officer at the New Jersey Business and Industry Association, to talk about the state's budget. Here's a clip from that discussion.
On June 30th, Governor Murphy signed New Jersey's fiscal year 2026 budget at $58.79 billion. It's the largest ever. Some of the key items in the budget include $1 billion in new taxes, $4.9 billion in property tax relief programs, $7.2 billion full payment to the public workers pension system, $12.1 billion for K through 12 school aid. There's a $1.5 billion structural budget deficit, and there is a $6.7 billion surplus. As I look at this budget, I don't see anything surprising. It's basically what we've been getting for the past few years, both from a negative and a positive perspective. On the negative, there's the usual more taxes, a structural deficit, and no real spending cuts or reforms. On the positive side, and we've especially seen this since the COVID money came in, there's full pension and school aid payments, and there's a healthy surplus. What about you? What are your overall thoughts on the budget from the business community's perspective? Bad, good, somewhere in between?
Good question, Jeff, and I think you hit the nail on the head with these somewhere in between. This is not a budget that NJPIA or myself could support outright, but it's also not all bad. Anytime you have a budget this big, you're spending $58.7 billion. It's going to be on good things and it's going to be on bad things. At the end of the day, I think you laid out some of the good and bad in a nice way. We still tax too much and spend too much, but some of that spending, it goes to that fifth straight full pension payment, which Governor Murphy and the legislature deserve credit for. It goes for school aid increases, which they deserve credit for. We see investments in things like innovation, workforce development, and infrastructure, all of which are pro-growth investments. I would argue we don't see enough of that, but we still see some investments there. But on the negative side, that's spending too much. This budget is 70% higher than the last budget of Governor Christie that he signed. So there were 8 Murphy signed budgets now, and in the aggregate, they've gone up 70% since the budget that he inherited that Governor Christie signed. Now, a big chunk of that in Governor Murphy and the legislature's defense is pension increases, school aid increases, but a big chunk is not. A big chunk is discretionary increases. We still heard a lot of talk over these past couple of months during the budget process that, oh, this is going to be a really hard budget, a lot of hard decisions that we don't know what we're going to do. Where's the money? And yet, when push came to shove, we still spent $500 million more on discretionary kind of poor Christmas tree items in the budget. We can't afford that.
You can watch the full interview at the link on your screen. So AJ and John, it's hard to watch that clip without really noticing, I think it was one of the first things Chris said about how much larger this budget is than the last budget passed by the Christie administration. Because if you talk about just years, you're talking about 8 years roughly. Mm-hmm. I mean, what can the NJCPA do? What can the CPA community do to sort of maybe address that concern? Because I think the entire business community is concerned about the size of the state budget. How, is that sustainable? What do you think the NJCPA can do to maybe address that with the new governor and the legislature?
Well, one, I appreciate the pro-growth investments that we see in the budget. So I think that, that's a plus, right? And then there's also funding for pensions. Mm-hmm. And so that's also a plus. But we also have to pay attention to our spending and those discretionary increases. And so I think it would be great. We've had conversations with the state chamber and the business community to have some sort of like economic council, mm-hmm. Where we could talk about issues with the governor. So I would really appreciate the opportunity to have those kinds of conversations with the new governor.
And John, I know before the broadcast, you had made some comments about the surplus and how much of that money the last mm-hmm. couple of years has been coming from the federal government, some of it being COVID money and so forth.
Yes.
And you had some concerns about that.
Yes. Is that going to be sustainable? Is that going to continue? Likely not, but it's something to look at. And when you look at this budget, you see $1 billion of additional tax. That's primarily in the realty transfer tax, gambling tax, cigarette tax, and the vape tax. And the one item I would like to also highlight is the property tax relief that's been shown on the slides that everyone's been able to see during this presentation. This is really gearing towards individuals, not businesses. A big takeaway that I had from that video.
Right. Yeah, I know that's always a big complaint of Jeff Kazerman, who did the interview with Chris, is that they never seem to, the legislature and the governor don't seem to spend as much time focused on the business community. And it's a complaint, frequent complaint of Tom Bracken, Michelle Sikirka from the Chamber and NJPIA. And it's just, I think the business community just wants a little attention, little attention.
Yes.
Yeah. You can hear more from Chris at our free July 30th webinar, Navigating the Economy, National and New Jersey Updates. The registration link is on the screen. So turning to another program that the society has been very active in for probably the last, I'm going to say close to 6 or 7 years, is something called the ACFR. It stands for the Annual Comprehensive Financial Report. And I'm going to let AJ explain that.
Sure. So ACFR is legislation drafted by NJCPA and NJBIA to create a more transparent understanding of the state's financial health. So it requires the state auditor to publish a plain language summary of the annual comprehensive financial report. And it's approximately 400 plus pages and very technical. So the plain language summary shows government-wide financial data, comparisons with other states, anticipated revenue versus original appropriations, and economic and demographic data. So the first summary was published in April.
So John, do you want to share some of the takeaways from the summary?
Sure, Don, would love to. One of our past state presidents here at the NJCPA, Walter Brash, who's key involved in drafting this legislation, he recently summarized the key findings. Give me an opportunity here to share some of what he wrote. When you compare it to other states' benchmark, which all of us accountants live by, in the Mid-Atlantic and Northeast regions, New Jersey is one of only three states with a negative net position. This signifies a substantial financial challenge relative to its neighbors. For fiscal year 2024, total revenues for the primary government were $95.6 billion, while total expenses were $86.6. This indicates that revenues clearly exceeded expenses, but as was mentioned before, a lot of this played a significant role with federal funds, which may or may not be coming down the pike. As of June 30th, 2024, the total outstanding long-term obligation for government activities stood at $201 billion. This is mainly attributable to the state's net pension liability and other post-employment benefits. When it comes to balance in the rainy day fund, something that we all need to know about, New Jersey ranks 10th lowest among its 14 neighboring states. However, there is some good news. The New Jersey population has seen an increase, reaching nearly 9.5 million people in 2024. However, the state's unemployment rate has at times been higher than the national average. The state's gross state product, often known as GSP, has also increased, indicating economic growth. Let me share some numbers on that. In 2025, New Jersey's gross domestic product reached $691.4 billion, which is a 3% increase from the previous year. Over the past 5 years, New Jersey's GDP has grown at an average of 2.1% annually. Now here it is. This growth rate ranks New Jersey 23rd out of all 50 US states in terms of GDP growth over the last 5 years. Very interesting number.
Yeah, and John, you mentioned Walter Brash, and anyone who's ever attended a meeting with Walter, say thrown by the chamber and NJCPA, where there are lawmakers present, Walter's always bringing up the total outstanding long-term obligations for the state. That's been a big issue for him for a really long time. I think the great thing about the ACFR is that now that information is readily available to everybody. I mean, I'm sure, you know, your typical New Jersey resident's probably not going to link into it, but I mean, for the business community, for the media, and certainly for lawmakers who may not be aware of it, I think the ACFR could really be a great tool. And the NJCPA really and the NJBIA played a real strong role in getting that.
Both groups were very instrumental to make it more transparent for all our New Jerseyans to see this.
We did get one question related back to our pipeline discussion. It's regarding the new CPA pathway. Will this apply to someone who graduates with a bachelor's degree prior to January 1st, 2026? AJ?
Yes. So as long as you meet the requirements, then you can test and, you know, take the exam and proceed with the alternative pathway in those requirements.
Okay.
Yeah.
Right. Keep the questions coming in.
Yeah.
I know a lot of people have questions about the pipeline, the budget, and so forth. So keep them coming in.
And that's key, Don. Flexibility, alternative pathways.
Yes.
Yeah.
Alternative pathway is a great avenue for our students.
Yeah, absolutely. And that's where the education is critically important. We can't assume anything. We have to assume that whether they're a CPA or a CPA candidate or a student, just assume they don't know anything, and let's give them all the information they're going to need, because listen, if I were in their shoes, I'm not sure I would be aware either, because there's so much else going on in the world. It's tough to keep track of things like that, but it's important.
And that's why we're so focused on the awareness, the impact, and opportunities. And we want to hear from members, what's your experience? We want to strengthen the relationship with the state board to make sure that they understand, the service that's required, so that we don't leave people in the loop,
Right. Well, that's part of that phase 2 idea.
Right.
Instead of playing defense, now we're playing offense. Now we're communicating about all of the available options that are available for students out there. So, all right, we're going to stay in New Jersey, but now we're going to talk about the election. So you may be aware, or you might have heard, that both our governor and all 80 assembly seats are up for an election this particular year. AJ, I know we have a number of activities related to the election.
Yes, we do. So one is that a survey will be going out to members in early August asking for CPA's top priorities for the new governor. So please be sure to participate. We will feature an article in the fall issue of the New Jersey CPA magazine coming out in September. Both candidates answered a number of questions. I thought the answers were interesting myself. We will also have a free live Q&A session with Jack Chittarelli on October 6th. So be sure to register at the link on your screen. And Jack recently announced his running mate, who is the Morris County Sheriff James Gannon. Just so that everyone is aware, we extended an invitation to Congresswoman Mikey Sherrill, and she was not available, unfortunately.
John, you talk about the PAC a little bit?
Yes, the PAC is very important to our profession, to our accountants and license holders. And when we look back at the numbers, as we're all accountants, we have to graph everything. 319 members contributed in 2024. So far this year, 227 have contributed. What I like to stress, it's not about the size of the donation, but it's the number of our members that are able to make a donation. It could be $10, $20. The amount is irrelevant. It's actually the number. So when members of our delegation here or our government relations team goes to Trenton to discuss pressing issues for our profession, we can go and we could sit with the legislator and say, of our membership, X% participate. When you benchmark it to other industries, trial attorneys, realtors, we fall far short of it. So I'm asking everyone to please get into this. Please make a small contribution. It's a bipartisan PAC, and it will definitely help us down the road when issues come up, not only for accountants, but for business.
Just one quick note. I did not know this, but apparently Mikey Sherrill has until July 28th to name her running mate. I read that during one of the announcements about Jack Chittarelli's running mate. I don't know what happens if she doesn't name running mate by July 28th. I don't know if there's a penalty, but I just thought that was interesting. So we should be finding out her running mate pretty soon. But John, I wanted to talk more about the PAC. I know that you and AJ attended a meeting recently where the PAC came up, and some members expressed concern about, well, I don't want to give to the PAC because I don't think the PAC gives to the candidates that I like, so to speak. And I think we should talk about that a little bit, because chances are there is no candidate out there who has every viewpoint that you do. And I think one of the things the PAC does really, really well, as you pointed out, it's nonpartisan, is that it identifies candidates who have favorable positions for both the business community and the county community. And that's the priority. It's not about trying to find candidates that are aligned 100% with what we think or what our members think. So could you talk a little bit about that?
Sure. As was mentioned, it's a bipartisan PAC. And this question did come up almost as a restricted contribution to the Political Action Committee, which is impossible to really do. We look at it and we support both sides of the aisle, because what's most important is acts that are going to help our profession. Years ago, the sales tax issue was raised, and all of a sudden everybody started calling and being concerned, because that could have a significant impact on our businesses, on our professional service businesses, doctors, accountants, etc. but primarily accountants. And that's why it's so important that we support this.
Yeah, and I would also add, when we look at the work that's gone into the additional pathway, currently, we have to be focused and think about this, because we have to get bills passed through on both sides of the aisle. And so our bill needs to go through the Assembly, have a full vote, the Senate. So we really, in order to push our issues forward, we have to support those who are supportive of the profession, and not just, restrict to one individual. And it's just what's best for the profession. And so I would echo John's comments that, it's really important to give, and lawmakers pay attention to those numbers.
Right.
They perk up in their chair when you go see them and speak with them, and you say, one of their first questions, and I've had the luxury of being in these meetings, is how big is your organization and how many people participate in your PAC? So the more we have, the better, the more that they will listen to our concerns.
So we did get a question regarding the budget. And it's a little bit tricky, but I think it's a good question to discuss. So the question is, being aware that debt level is important, is our state legislature taking that information seriously? And is the discussion of are there discussions of any plans to reduce? I'll just say personally, I haven't met nearly as many lawmakers as you, AJ, or certainly Jeff, but the lawmakers that I've encountered, I think, the portrayal of most lawmakers, whether it's federal or state, is like they're selfish, they're greedy, or, they're corrupt, whatever. Most of the lawmakers I've ever met, I think, want to do the right thing, and they are aware of the issues that are out there. So, that idea of, are they aware of the deficit? I think they very much are aware of it, but I will say that probably for a number of years in New Jersey, maybe there hasn't been a message where they can all coalesce about, well, how do they reduce the budget? How do they reduce the deficit, and so forth?
I think that's a great point. It's how, right? So there are lots of conversations being had about, what do you reduce? Do you increase tax? Do you, just various ways to get around the same thing. But I think what's key, and why I mentioned the Economic Council earlier, is that I feel that we really need a stronger way to communicate, on behalf of the business community, so that they understand and they hear directly from, CPAs and the other members of the business community, what matters and what are, sustainable options as the profession sees it, right? So we currently don't have that clear connection, and I think that's sometimes where the disconnect is. So I hope that we can strengthen those relationships.
Right. But I would say, John, let's not rely on lawmakers 100%. You mentioned earlier, AJ, we're going to be sending out that survey asking our members, well, what recommendations would you make to the next governor? And we've seen it firsthand, both with the recent passage of the Big Beautiful Bill and some of our wins there, that lawmakers do listen.
Yes.
To CPAs. They do listen to that. So, John, what are your thoughts on that whole idea of what role we can play, or CPAs can play, in trying to talk to lawmakers about deficits and how to rein in the budget a bit?
First, we need to get the comments from our members. So once the members comment on what they see, and each and every one of you see it on a daily basis, right? So you're out there with your clients, you're out there with the companies that you represent. So please put this into this survey. It's important that we have the tools so that we can go to the lawmakers and say, this is what the people that are seeing business on a daily basis face every day, and these are the challenges. So if we can get these things addressed, we can approach legislators and say, this is what the constituents are seeing, and these are the problems, and how do we fix them? As AJ said, you may have to have a combination of taxing and cut spending. Eventually, something has to give.
All right. Well, speaking of someone who always tries to do the right thing, now I want to turn the program over to Rita Scarata, and I want to congratulate her because she was recently unanimously approved by the Senate as the director of the New Jersey Division of Taxation. So, Rita, congratulations.
Congratulations.
Rita, I'll turn the program over to you.
Okie dokie. Thank you very much, Rachel. I am sending you a clip that should go into you'll know when to post it, please. So hello, everyone. I'm just always so delighted to be here. I'm Marita Scarata. I'm the director of the New Jersey Division of Taxation. I'm here with some updates on what's happening at this agency, information about legislation resulting from the passing of New Jersey's recent FY26 budget, although I know you've already had some discussions on that, and a little bit more about the IRS and the recently passed Reconciliation Act at the federal level and how it intersects with New Jersey. Again, I really appreciate this opportunity to speak with you directly in a live broadcast format, and I want to affirm the terrific working relationship that we have with the NJCPA and all members. I certainly would ask that you post questions. Honestly, given the time crunch, I don't know that we're going to have time to get to your questions in a live format. I suspect that, just setting my alarm here, but by all means, please post them, and Rachel and Don will make sure that I get them, and we will respond very shortly thereafter. Okie dokie. So if we're all ready for this, here we go. Again, usually what I start with is basic housekeeping, talking about the availability of the tax practitioner hotline, as well as email. I am not unaware that there have been there's a lot of busy time on the hotline right now. It's an incredibly busy time of year. Do you remember when our life cycles used to have seasonal, just had a seasonality to it? It isn't like that anymore. I know that you're seeing it in your profession. I sure as heck am seeing it in mine. As the mission creep of the Division of Taxation keeps going, there are many more programs that we're responsible for besides the administration of 42 tax types and fees. We are also required to administer tax relief programs, credit and grant programs, and things like that with essentially the same number of people. And so although we have beefed up our call centers between summertime with some leave time and all of the other things that are coming at us, I know some of you are concerned about the portal. There is a direct portal line that you can take advantage of. And I also want to make sure that everyone here is aware that there is now an appointment scheduling system. And I've noticed that in the listserv, because I monitor that thing a couple times every day, that a few of you have tried it and have extolled its virtues. So there's an appointment scheduling system specifically for the tax practitioners. I highly recommend that you take advantage of that. What it means is that you can schedule the time at your convenience for somebody from the division who's well-versed in what you need to answer your question for like a 15-minute chunk. We can talk about one or multiple clients. You just let us know what you want to talk about, and we will make sure that you get the right person to answer your question. So for that, again, you can see up in the box that the practitioner email, there's an upload form there, and the practitioner contact form is there, and that is where you'll see the appointment system from our website. A lot of you are concerned about the portal that we have recently rolled out. A few things about the portal. New Jersey, of course, is moving to a tax modernization system. It's long overdue. The system that we are implementing is actually very terrific, easy to use, and it will provide a lot of insight and information both externally and internally to us. It won't make the people here scramble through multiple conversations on a mainframe to get an answer to you. So ultimately, you're going to see a big boon to everybody across the state. It'll be very effective. But like everything else, change is difficult, and changing the way that you have become accustomed to filing for your clients, I get it. It isn't an easy task. We started rolling out information about this. We've been talking about it for years, but about 6 months ago, we started making sure that there was posted information that we were going to convert over to the system. Sales tax family, about 17 taxes within that. We're going to be the first batch of taxes that are our phase 1 taxes. So beginning in May with the April filings, and again in June with the June filings. And again, what those are called, and this is something that I really want to point out. Most of the time people just make a payment. They may recognize it, or you may have heard it referred to as an ST51. Those were what we call our monthly payments. The ST50 is the quarterly reconciliation, where you show us the gross receipts for the entire quarter and pay the balance if there's any due, or the full amount due if you don't make a previous monthly payment. So what you'll see is some slight different jargon, of course, in the portal, and that is something I know that some people are adjusting to too. Setting up accounts in the portal for the administrator, for the delegate. There are multiple walkthroughs. There's a webinar. There's YouTube videos. There's portal assistance. All of those things are available to you. Again, you can go to the main page of the Division of Taxation and go to the box where it says Upgrades to New Jersey Tax Filing System. Click on that. It'll take you to another page that, if you wouldn't mind, Rachel, posting right now. That is an index page that gives you access to a number of different things that are, again, available, including walkthroughs, FAQs, lots of things that, and pay attention to some of the things that other folk are putting in the listserv and are showing up in our FAQs. Simple things, sole proprietors, making sure that it's last name, comma, first name, making sure that you put the client's name in all caps, understanding that when you take the PIN, you put the 2 zeros on the front of it to create the passcode, those sorts of things. I can tell you, though, that there is over $1.35 billion in SNU receipts, returns coming in daily still, at 2,500 to 3,500 filings every day. So there has been a huge uptake in this thing. So you're not alone. There's a lot of people, professionals who are successfully navigating the portal. And I believe that, most of you will be able to do that without too much trouble. I know there was something else I wanted to throw in there, but I didn't write it down. So if I think about it, I will get back to you on that. So now I'm going to switch over to legislative changes. So again, I'm going to speed through this because, frankly, if you have specific questions, it would be best for you to pose them to the NJCPA to throw them back at me. There has been an increase in the internet casino gaming tax, internet sports wagering tax, and the fantasy sports operating fee. Effective the 1st of July, 2025, all of these are now taxed at the same rate of 19.75%. Beginning with the year 2026, certain capital gains from the sale or exchange of qualified small business stock, frequently referred to as QSBS, are exempted from New Jersey gross income tax. Effective August 1st, 2025, there's been a modification to the tax rate for certain nicotine products. The tax on cigarettes per pack has gone from $2.70 to $3 a pack. Liquid nicotine is moving from 10 cents per fluid milliliter to 30 cents per milliliter on the volume of liquid. There is a floor tax currently in effect. That is an inventory that is taken by the retailers, the wholesalers, and the distributors of the inventory that they have as of 12:01 a.m. on August 1st. And the differential of tax is due to be submitted with a return and payment on or before October 1st of 2025. Again, lots of information on the website. There has been, for some of you, this is a sticking point that may be of value. There has been an amendment to Section 8 of Public Law 2004, Chapter 66. And what that affects is what was colloquially known as the mansion tax. There is now a graduated percent fee. It took effect on July 1st and applies to transfers of real property or controlling interest of sales that were made on or after July 10th, 2025. So we've already passed that period. It places an additional fee on certain transfers of real property that are over $1 million. That first $1 to $2 million still remains at the 1% level. The big change is that it places the onus for the payment of the tax no longer on the buyer side, but on the seller side. It is the grantor who will pay the tax, not the grantee. The rates are available. Just quickly, I'll just go through them. Again, as I said, it's 1% for consideration between 1 million and 2 million. If it's 2 million to 2.5 million, it's 2%. it really matches the numbers. You can figure this out. It's 2.5% for consideration in excess of $2,500,000, but not in excess of $3 million. 3%, and then 3.5%. You all can figure this out easily. I'm not going to worry about that. There's also been an appropriation for the Anchor Property Tax Relief Program, the Property Tax Reimbursement Program, colloquially known as the PTR Senior Freeze, as well as appropriations for funds for the Stay NJ Property Tax Program. Payments are starting to go out for the senior freeze. They started on the 15th of July and will continue until we are finished processing all applications that are received prior to October 1st, 2025. Anchor checks will start going out, anchor checks and direct deposits for Anchor will start going out in September. By mid-August, all persons who are to be getting an Anchor check without having to file themselves. Those are the auto files events. Shoot, I'm at 18 minutes here. Those letters will be going out in the beginning of August. So payments will start being made in, as I said, in September, again, by direct deposit. Some senior freeze payments will be made by direct deposit if indicated on their Pass 1 application. Also, the Stay NJ payments will start rolling out in February of 2026 for those who are entitled to it. There's some modifications with film and digital media content production tax credit programs. There's been changes to the angel investor program, but I really wanted to hit this. I want to talk just a wee bit about the IRS and the legislation formerly called the OBBB, now referred to as the HR1. First with the HR1. From a tax administrative perspective, there's very little impact New Jersey-wise. From an individual gross income tax perspective, the only real change that I think we may see is a slight change in the filing of PTE bait persons because there has been an expansion, of course, in the SALT cap. However, there is an income limitation on that, and that universe may not be particularly large. So you may see some of your clients making some decisions about whether they want to participate in the PTE bait program or switch back over to taking the standardized deductions or an itemized deduction. There are some changes that will affect corporate business tax but again, because we are not fully coupled with the IRS, many of these modifications will be minor. Frankly, they appear to be fairly revenue neutral as far as we're concerned. And more information, I think I can probably share with you come October or November when the next IssuesWatch is put out there. But I wanted to, as I said, simply talk quickly about the IRS and the cuts that are being made to that agency in the budget and how the agency is going to reduce its footprint by 30%. So for a moment, just imagine the impact on your firm or you if you had to complete the same number of tasks and obligations that you completed 100% of your time and full force at a 70% rate. Reports, audit information, loss of institutional knowledge, outreach to tax professionals, offsets of debt, refund management, contact centers, walk-in locations, the impact of obtaining documentation. For example, the certification of S-Corp status we're already starting to see some rollout on that. Getting answers to questions that you ordinarily could. This is critical stuff that is going to be impacted by these cuts. We'll all adjust somehow, but it will change the way tax and tax compliance is executed nationally and certainly within New Jersey. And here's why this means something. Imagine the impact on tax compliance because of the reduced impact on an emphasis on resources for enforcement. I think voluntary compliance is very much at risk. There's going to be consequences that are felt in your field. There may be less interest by persons in filing. And certainly there are going to be some opportunities where you or associates in your firm will be hit with taxpayers who are less risk averse, and they will be testing the integrity and ethics of tax practitioners, asking for other opportunities that in the event that they're not going to be scrutinized. Their tax returns may not be as scrutinized as they may have feared in prior times. So with that, I'm going to wrap up, and thank you very much for your time and attention. The NJCPA will forward any unanswered questions or comments that are submitted here on the chat to me post-presentation. And thank you. I hope you have a marvelous day. Appreciate your time. Bye-bye.
Thank you, Marita. I always appreciate it. One of the great things about Marita is she mentioned a couple of times Rachel Bell and I feeding her questions, but a lot of times she comes to us and she will offer up solutions to some of the questions and problems that our members have. So I can't say enough good things about Marita. So now we're going to turn back to AJ's conversation with Mark Koziel to hear what he has to say about the One Big Beautiful Bill Act.
You recently issued a statement about the Act and said that it includes a number of important provisions beneficial to the accounting profession, and that it's a win for millions of businesses, taxpayers, and tax practitioners across the country. Can you give a few examples, highlights of what you think are the benefits of the Act and anything we need to pay attention to?
Yes, and I want to get politics out of the way first. Okay. Yes, I did have a positive statement about the bill. There was going to be some bill that was going to pass in this current regime. And so for us to try and get as much as we could get for the profession became critical on that. And so in that statement, I not only said that it was a win for taxpayers in business, small business, and for our profession, and I said not every bill is perfect and not everything in the bill we agree with. But when we look at just those things that affect the profession, it was a big day. It was a bill that was a big win for us, and it starts first and foremost with the pass-through entity tax. And for those who were following the drama in, AJ, your state and many other states were so supportive in helping us be able to effectuate change around the PTET and the removal of the deduction for personal service businesses, SSTBs. The original House bill that came out was going to penalize our profession, doctors, lawyers, dentists, any personal service business by disallowing the ability to pay the pass-through tax at the entity level like was implemented in 2017 after the state tax limitation was even put into place. That would have been billions of dollars to the profession. And not every firm was affected by that based on, some of the state tax, you have a limitation. For those who are making less than $500,000, you can still get the $40,000 deduction. But all that aside, things like this tend to gain legs along the way. And so if they started to really go after personal service businesses at that level, there's no way we couldn't think that was going to continue to trickle into the profession, and those limitations would have gotten smaller and smaller and smaller, and that disallowance would have been greater and affect more of our members. So we had to cut it off as quickly as we possibly could. And like I said, working with the state societies, working with the firms, working with the other professions. We had the AMA, the ADA, the ABA, all got involved based on our leadership to get them involved, to get there and really talk to their senators and make sure that didn't end up in there. That probably by itself is the biggest win. And I tell all of our members today, if you have doctor clients that are in partnerships, if you have dentists, if you have lawyers as clients, tell them that they should be thanking you and more than happy to pay your invoice because it was your profession that helped stop that pass-through entity tax limitation that would have been there. That is a big professional win and one that we should all take credit for when we're talking to our clients that might be in a personal service pass-through entity type of situation. And then there's other pieces, the 1099K reporting, that limitation was going to go down to $600. It's still back up in the 25,000 category, which we were supportive of. There were really some big items that we had, the 100% bonus depreciation, the R&E expenditures, the Section 174, Section 163J, business interest deduction, 529 accounts, which we can get back to, the 199 1099A QBI and an increase in that. You know, there's a whole litany of things that ended up in that bill that I would say are business friendly, but also gives us a great opportunity by the bill passing so soon and giving us the ability to meet with our clients and do some real tax planning. We haven't had this type of opportunity in over 20 years. It was 2002, I believe, was the last time that we had any type of tax legislation pass well before the fall, if not closer to November and December. That's been our MO for the last 10 plus years, is seeing tax legislation pass November, December timeframe. Even the first Trump administration, that bill was passed by Congress December 20th, signed into law by the president December 22nd, back in 2017. And so this is really a big win and a huge opportunity for us to be meeting with our clients and do some great tax planning this year.
I really appreciate your comments, and it just shows the importance of working together, from state societies to bringing in other professions and really taking the lead as a profession on issues that matter. And we can see that with the business related aspects of HR1.
Yeah, and AJ, I mean, you were in Washington D.C. in May when we went up to the Hill. Our AICPA Governing Council, in collaboration with our states, all of our state society executives and their representatives on council, went up to meet with their congressional leaders, right? And 3 of the 4 items that were on that list successfully passed in this final legislation. 3 of the 4. That's unheard of. I mean, we've taken some of these items up on the Hill for years without ever seeing the light of day, and now we got 3 of 4. And one of those was passed after HR1 with the relief for any type of weather relief that we had that went into place, the disaster relief legislation that was passed last week.
So, AJ, in regard to the pass-through entity tax, it's easy to sort of look at it and go, well, all's well that ends well. It didn't end up in the final legislation. But I remember that back in May when the profession started talking about it, it really was one of those sort of uh-oh moments. So I remember you and John being in an event, Accelerating Scholars event, coming back from AICPA Council, and it really was sort of like, oh, shoot, what do we do here? So, I mean, talk about what you mentioned during the video, but also Mark talked about that whole idea of, working together on the issue in state societies like the NJCPA working with the AICPA.
So I would, start out by saying that what I mean by that is it's really a group effort. State societies had to reach out to members. I want to thank all of our members who did the outreach, who made the phone calls, who, spoke to legislators. That all makes a difference. And that's what we mean by, our ability to work together. And that just multiplies, And so when we're talking across the state about our issues, then lawmakers pay attention. And that's what happened with PTED and other issues and the provisions that Mark talked about as wins, which we need to talk about proudly, because this made a huge difference.
Right. Mm-hmm. And John, what about what Mark said about how CPAs maybe should take a little bit of a victory lap with their clients, and especially the personal services businesses that really benefited from the fact that pass-through entity tax got taken out of the legislation?
Right. Absolutely. When that was done, we were in Washington, and we got down there and we saw this in the House bill. So we immediately had a call to action at the council meeting. And this was one of the primary issues that we brought up to them. And we said, this affects our members, especially all personal service corporation, personal service entities, doctors, lawyers, all the small businesses that are in that SSTB arena. And they did listen, and it was removed. That could have been detrimental, to say the least, detrimental for our members who are in the flow-through entity arena. So we're very, very happy. And that was just done when we walked in. That was basically probably enacted overnight, if I recall correctly, when we were in May. Overnight, 4 o'clock or 5 o'clock in the morning, all of a sudden we woke up and we found this. So a great thank you to not only the NJCPA, but the entire accounting community for coming to the forefront and getting this done. Right. One thing I'd like to add also, sure. You heard about this bill being passed on July 4th. Being a practitioner, this gives us a lot of opportunity to help service our clients, not in the 11th hour on the last week of the year, but it gives them an opportunity for 6 months. We're actually doing some of these case studies and scenarios right now with this 100% deduction for depreciation. It gives us an unbelievable amount of planning and gives us an opportunity to service the businesses of New Jersey and the surrounding area much better.
And that's a great point. Extra time always is good, not just for what was in the bill, but also to make it clear to practitioners and the public what wasn't in the bill, or maybe some of the myths about what was in the bill, because there was so much discussion about it leading up to the signing that I think there's been a lot of confusion about different aspects of the bill. So that it's always good to have a little bit more time to explain these issues. So you said you can, because I'm sure all firms, all practitioners are getting lots of questions from their clients and from taxpayers.
It's amazing. Yeah. It's amazing the number of questions and inquiries that are coming in on a daily basis. But at least now we have time to plan. We haven't had this opportunity in decades to do this. Yeah. So it's a great win-win for our profession.
And I think a great lesson, something you had said, just like it was important for us to let lawmakers know about the impact that the CPA shortage was going to have on businesses and others. It was once lawmakers found that the impact that the pass-through entity tax was going to have, not just on accounting firms, as you were saying, doctors and other professionals as well, that's when their eyes started to open wide and they went, uh-oh, maybe this isn't such a good idea.
Correct.
Yeah. All right, so let's get back to AJ's discussion with Mark on a few other topics.
So are there any other significant pending legislation areas of, that you're watching or supporting or opposing right now?
Yeah, I mean, there's a bunch of things, like we're always watching around AI, right? So there's always rumors around AI legislation and the proposal of it. They tried to get into this bill, the HR 1, limiting the state's ability to regulate any type of AI-related initiatives. That was unsuccessful in the current bill. So, we are going to be watching states. We also have to watch around the world, too. The UK's rumoring around some level of AI oversight that they want to implement. Government funding is right around the corner. And so, yeah, we all have to worry about the deficit that was created or added to based on this bill. And that is, again, one of those things that we weren't as happy about seeing. But again, we knew that the bill was going to pass. So now when we talk about spending, the deadline is going to be September 30th, and there's going to be bigger conversations around that. There's going to be a rescissions package, and there's a lot of updates that need to happen around this HR 1 bill to make sure that it is able to get implemented and things stay the way that they are. So the rescissions package, the deadline is, I believe, July 18th. So we're watching that very closely. And then there's one piece of legislation, of all the pieces that we had introduced into Congress looking for support. The one that hasn't made it yet is around STEM and getting accounting included in the definition around STEM. We're not going to be added changing STEM from STEAM, but we want to be included in the definitions. And that is a congressional bill that we need passed, but that hasn't yet made it to the light of day. With the disaster relief, I think because of current activities that have happened and current events with Texas, who we're always continuing to think about those families who suffered great loss during that. In North Carolina, again, there was another flooding situation. They're looking at the Midwest now, possible floods. That disaster relief really became high priority after HR 1 was done. STEM, we have bipartisan support. We are looking forward to that bill eventually making it. It just became less of a priority at the time, but we're going to continue to push that legislation as well.
There's been talk about dismantling the Public Company Accounting Oversight Board, PCAOB, and shifting the oversight functions for the SEC. And we know that the chair has announced her resignation. What should we be looking at around that and recent changes?
Hey, Jay, it's interesting because people have asked me our position on whether the PCAOB should stay or go. And I said, it's not up to us. It's up to the SEC. It's up to Congress on what it is that they want to do. We're supportive no matter where it's going to be and anything we could do to help in that process. But there are just three major tenets that we always have to keep in mind that are necessary for strong capital markets: enforcement, inspection, and standard setting. And so those three things will always remain. It's up to the SEC to figure out exactly how they want that to look going forward. It was in the proposed legislation, and the parliamentarian threw it out in H.R. 1. So now it's up to the SEC to figure out what their next steps are as we go forward.
Thank you for that. How are firms doing with implementing the new quality management standards? And are there any resources that you'd like to share? I know that's a big effort, if you will.
It is. It is one that worries me. And it's one that I think is incredibly important. Now, on paper, it sounds like it is this major lift. And hopefully for many firms, they already had some level of a quality management system in place before. And it should hopefully just be a matter of getting that updated based on where the new standards are out. There are tools. There are a variety of things. We've had a variety of webinars on this topic. CPA.com, our sister company around technology and does a lot of technology partnerships. They have a technology partner option for firms if they so choose to go with a dedicated technology around it. But we know of a lot of firms who are doing Excel as well. And so having Excel templates, and I believe we have some Excel support if people are looking for that with quality management. Now, the concern with that, though, is that an Excel file of your quality management system is fairly static. And one of the things that's important with the quality management standard is constantly updating against that to make sure that we are in compliance with where the QM standard is. And so there's this constant monitoring that should be taking place. And Excel would be a little more challenging to do that than to have a technology solution at your fingertips to be able to do it.
What are your priorities for the coming year? And I know that conversations have been ongoing recently around RISE 2040. So can you talk about maybe that as well as anything else that you're focused on?
Yeah, for me, especially as I came into this role January 1, for me, it was really about listening to our members. So we've taken that and we put that on steroids. So I started very quickly. We set up an email address, askmark@aicpa-cema.com. I received over 1,300 comments and emails that came into that. It gave me a good understanding of what our members are looking for. And in the U.S., it was around, don't forget about the small firm, keep the legislative support. We need legislative help on a regular basis. We want to feel a sense of community and communities as we progress forward. So that was an easy kind of quick hit for me to understand a little bit of where we needed to be strategically and how we're supporting different things. But as you mentioned, AJ, RISE 2040. RISE 2040 is our strategic visioning project that has been around in the profession since the late 90s. And interestingly enough, from what I understand, I believe we are the only profession that has ever been through this type of visioning exercise. And then now be on the third iteration of this. The 90s was the vision project to look out 15 years. In 2011, that vision project needed to be updated. That became CPA Horizons 2025 under the leadership of our then AICPA chair and alumnus and resident of New Jersey, Paul Stalin, who was our chair at the time, that got the CPA Horizons 2025 project finalized during his term. And now here we are, 2025, and we need to look out another 15 years. And it was thanks to Paul as I came in, and he said, hey, by the way, Horizons 2025 is expiring. We need to reset this thing. And here we are now doing that with RISE 2040. The beauty of doing this now is we have this opportunity as the AICPA and SEMA join together to look at the profession globally. We are not alone in the issues that we have or the opportunities that we have here in the U.S. and being able to understand the management accounting side from a global perspective and what that means becomes really important. So it is a matter of looking at the hard trends and the soft trends of the profession. Do we have those right? What are those trends going forward into 2040? And more importantly, what are we going to do about it to make sure that we have the opportunities for success? We are now into the states. Any state that wants to run a 2040 strategic exercise project can do that. We've given the states the ability, the resources to do it. We're using our Leadership Academy alumni to help facilitate those meetings, which I think is just a fantastic opportunity for us to reset this and make sure that we are set as a profession to succeed thoroughly all the way out into 2040.
So we're going to spend about a minute talking about RISE 2040. Before we do that, you'll see on your screen a number of links to some quality management standard programming that we're offering. While you're all writing that down, I'm going to talk a little bit about 2040, RISE 2040 with AJ and John. So AJ, we are committed to this effort. We think it's important. It's going to be discussed at the September board meeting, but we're also going to provide some opportunities for other members to weigh in on this.
Absolutely. So we will involve our members, interest groups, chapters. We haven't outlined exactly what that will look like, but there will be opportunities to engage in the process because we're really focused on the strategic effort to move forward the profession for the next 15 years. So we think it's really important.
Right. And as Mark mentioned, John, there's a New Jersey connection to
Yes.
RISE 2040.
Yes, Don. Paul Stalin, who was the president of the NJCPA, was instrumental in Horizon 2025. And it's amazing we're there now, how fast time flies. So a big shout out and thank you to Paul for being a trailblazer with 2025.
Yeah. So we're running short on time, but AJ, can you please briefly talk about the controversial proposed changes issued by the New Jersey Department of Labor?
Sure. So you can access more information about the proposed changes at the links on your screen. But in general, the comment period for the proposal has been extended to August 6th. And
the Department of Labor, they issued proposed changes that are going to change the ABC tests for independent contractors.
yes.
And
So
go ahead.
by most accounts, what that means is what the proposed changes, the ABC test for independent contractors, the changes would make it harder to deem that workers, including gig workers, are in fact independent contractors. So that's really the crux of it in a minute or less. But,
right.
Yeah.
And you can access that information at the links on the screen. So John, as we wrap up, I'm going to provide a few highlights about some programs and services. Nominations are open for the annual Ovation Awards. You can nominate a colleague or yourself. There's 6 categories: emerging leader, innovation, exceptional educator, women to watch, impact, or lifetime leader. Nominations are due August 15th, and winners will be announced during the next IssuesWatch live broadcast on October 9th. You can go to njcpa.org/ovation. Thank you to all members who volunteer. Let us know how you want to get involved. Leadership positions, committees and task forces, high school and college presentations, writing articles and blog posts, small projects. You can go to njcpa.org/volunteer. We also have lots of affordable bundles of CPE. We have our virtual CPE pass, our corporate finance CPE pass, and of course, chapter CPE passes. You can go to njcpa.org/bundles. And of course, mark your calendar for the 2026 NJCPA Convention and Expo, June 13th through 16th at Borgata. I also want to mention a few free Membership Plus webinars that are coming up. Next week, I'll be moderating Navigating the Economy, National and New Jersey Updates, offered on July 30th and August 5th. Again, that's free. And then we also have Exploring Employee Ownership for Business Growth and Success, offered on August 11th and August 25th. That wraps up today's broadcast. Many thanks to AJ and John, and of course, Marita and Mark for their updates and insights.